By the time this sand runs out, I'm going to show you as a business owner how to retire with over $9 million tax-free. In this example, that's over $365,000 a year tax-free in your retirement. This is the same exact tax codes and strategies the elites, banks, and wealthy families have been using for decades to keep more of their money and give less to the government, except most people, especially business owners, have no clue it's even possible, and I'm about to break it all down. So my name's Jared. I'm a licensed specialist in this area. How to utilize these tax codes inside these accounts. Through my company, we're partnered with some of the largest companies in America. These are multi-billion-dollar companies that allow you to access these accounts through my license. Time's ticking. Let's break down how you can utilize these accounts personally and for your business to keep more of your hard-earned money and give less to Uncle Sam. So to fully understand how this 46-year-old business owner, right, got out over $9 million tax-free in retirement, let me first explain how you can make this a reality. There's a lot of numbers on this page, otherwise it will not make sense. Then at the end, I'm going to show you how you can start your own version of this. Really what this is, business growth without the government, how to keep more of your money. So you can do this personally, but as a business owner, this is where it can really take off. These are strategic financial tools for your business that allow exceptional growth, talent retention, and succession planning. These are certain cash value life insurance policies. Now, most people don't know you can use these for key employee retention and executive benefits. These IUL or whole life insurance policies can be set up specifically to use as part of a golden handcuff strategy, offering key employees, right, deferred compensation or additional retirement benefits funded through the policy's cash value, right? These benefits can be linked to performance milestones, encouraging employee loyalty, enhancing your company's appeal as an employer. Tax advantage cash reserve. So as the cash accumulates inside these policies, you can take tax-free loans with flexible repayment terms, creating a financial safety net for the business. What do I mean by tax-free loans? This column right here, consider that your cash, your liquidity. So if you needed $400,000, we have $678,000, right? And you're 55 years old, you could just loan that money out yourself. You pay an interest rate on it, therefore you don't pay taxes on it. So let's say you needed working capital, payroll, you needed to buy more equipment. Maybe you wanted to buy a building for your company, right? You loan the money out to yourself, go make yourself more money, then pay yourself back. Essentially, you're your own bank and working capital system. Well, what else can we do? Succession planning and buy-sell agreements. So the IUL policies play a critical role in business succession planning. They can fund buy-sell agreements, ensuring a seamless ownership transition if a partner passes away. What that means is the death benefit, which also comes along with the policy, all the cash that is in this policy gets added with the death benefit. It offers immediate liquidity to buy out the deceased partner's share, safeguarding the business and its surviving owners from financial strain. You personally, retirement planning for business owners who lack access to traditional retirement plans can use these IULs, and you can have multiple of them. You can have more than one policy as a personal retirement solution, providing a tax-free supplemental income while maintaining a death benefit for your family's financial security. And here's a hack. You can put all this within a trust. Also, the asset protection. In many states, the cash value within the policies is protected from creditors, making an appealing option for business owners aiming to shield their personal and business assets from potential litigation or financial challenges. What actually is an IUL or a cash value policy? Very simply, it's a permanent life insurance policy that offers the dual benefits of a death benefit for your loved ones and the potential to grow cash value based on positive performance of a market index like the S&P 500. Unlike direct market investments, an IUL protects your cash value from losses during market downturns while still allowing you to benefit from market gains. So what that right there means is as that cash accumulates, compound interest, Einstein said, was the eighth wonder of the world. As you earn interest on top of interest, if the market ever crashes and let's say you had your 401s, your IRAs, your stocks, and it went down by 10%, everybody else loses 10%. You never lose a dime. So all the gains you take and participate in the growth over the years, historically 6 to 10%, if it ever is a downturn, your money is always protected, so you have no downside risk, unlike your 401s, your IRAs, your stocks. The big thing is you have tax-free use of that money. And very quickly, on a personal level, tax-free growth in income. I'm going to go to the end and show you how that person got out that $9 million, right? Principal protection with market participation, right? You get some gains, you never have the losses. Flexibility for changing life needs, right? Flexibility by allowing you to adjust premium payments and death benefits over time, right? This ensures that your coverage aligns with evolving financial goals. So you have flexibility. Legacy planning is a big one and huge. Living benefits for life uncertainties. This means if you had like a chronic, critical, or terminal illness, you can use the death benefits to pay your medical bills. Let's go back and revisit the initial screen. I'm going to break down how this 46-year-old business owner ended up with all that money tax-free. So here's a properly structured IUL where you can put a lot of money into, but we minimized the actual amount of life insurance. So the goal here in these policies is not to buy a ton of life insurance because you have to pay for it. But this is a non-medical policy, means there's no blood test, there's no urine test or anything like that. So this business owner was putting in another $60,000 per year profits from the business into the policy. And you can see this column over here, it's showing earning at 6%. Now, historically, 6 to 10% because it's linked to the S&P 500 and other indexes you're allowed to link to. But let's just focus on if all you ever did was earn 6%, even though you have the ability to earn much more. This shows a potential growth over the course of your life, corresponding with your age and the year over here. $60,000 a year paid in till he was about 70. Then he stopped, never made another payment. So you can see they stopped making payments at 70, right? And if you come across, right, let's follow across at 70, how much does he have showing built up? 3.3 million in cash, right? And that would be tax-free. And then that following 71, 72 a year, he's like, well, I got that, 3.5 million built up. I'm going to start loaning myself out $365,000 per year. I'm going to pay an interest rate on it, right? But it's tax-free. So what you're doing is just taking a collateralized loan from the insurance company against this cash value, and you're loaning it back out yourself, which you never have to repay it either. And you could take more if you want, but you just see those payments keep coming out every year, and this is all tax-free. And if you passed away at any point, here's your net death benefit, which would be left probate-free, tax-free to your beneficiaries. Here it's illustrating at 96, let's say you happen to pass away then, right? The most you ever paid into the policy was 1.5 million. Those $60,000 a year payments, which I showed up there. But what you ended up with is 9.1 million tax-free out to you in your retirement. That was while protecting your family. If you passed away at any point, they would have been immediately taken care of and getting that tax-free retirement and living benefits. And the thing is, you can actually pay and own the policy. You're like, well, what if I can't qualify because of my health? Banks do the same exact thing. They take policies out, an executive of the bank, right? They pay and own it. If that person passed away, the bank gets the payout. You can actually pay and own someone else's policy, like a loved one, right? A business partner. You can do this for your kids. Exactly how wealthy families throughout history have used these same financial tools to make themselves extremely wealthy. And again, my name is Jared. I look forward to talking. I'm licensed in multiple states and I'm contracted with the top carriers. That's the only way you can set these policies up is through a specialist like myself, through our company, which is contracted with these top carriers in the nation that have these certain policies. We have to know how to set them up, customized for you, your family, and your business. So take advantage of these tax codes. Stop making banks and everyone else wealthy. Start doing it for yourself. There's an opportunity. Text the word to the number you see on the screen right now. We can set up a consultation and discuss if this is a good fit.